This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. So it's the dog days of summer here in 2024, but that's a great time to take a look for classic value stocks. We haven't done this screen in a while. Maybe like at the beginning of the year was the last time I did it. And we are once again having the S&P 500 and the NASDAQ hitting new all-time highs. But if you're thinking, no, there's not going to be any value out there, Tracey, because they're hitting all-time highs. It is being driven a lot by the big Mag 7 stocks and a lot of the other big caps that are involved in the AI. And we've seen with the Russell 2000, which is the small cap index, that it's not anywhere near its all-time highs. So perhaps there's some value in slightly smaller stocks. I don't know, because I haven't looked for the classic values in a while. So I'm not sure where we're going to find some or if we are going to find some. You never know when you run this screen. In years past, we've got as low as, I think 6 is the lowest number of stocks that the screen has produced when I've run it. And then I don't know what the upper end was. I want to say it was maybe 18 or 20 stocks. And that's a lot for this particular screen, because this is a very intense screen that's on Zacks.com. On the premium screens, these are in the predefined, and it looks for classic value stocks with the high Zacks rank and the high style scores. And what do we mean by classic value? That is the fundamentals that value investors usually use to find value stocks. So that's the, price to earnings ratio, the price to sales ratio, the price to book ratio, the PEG ratio, and the price to cash flow ratio. So this screen has 5 of the key value ratios we would use in a screen. Normally, you don't put them all together because that's going to be very, very narrow. But in this particular screen, we always have done them all together. And that's why we've only ended up with, anywhere from 6 to maybe 20 stocks in the screen, because it has to meet the criteria for all of those, plus be a number 1 strong buy or a number 2 buy, and then also be a style score of A or B, which are the highest style scores. And then it also adds on a few other little particulars. The stock must be over $5, because we don't want to have like penny stocks in the screen. Usually you wouldn't have analysts really covering stocks that are, under $1. Usually, not always, but usually you just wouldn't have analyst coverage on it. So that means we're not going to have a Zacks rank on those. But just to make sure we're not getting anything that's trading that low, we're looking for stocks that have closed over $5 in the prior session. And then trading volume has to be over 100,000 on average, the average volume. And I was kind of taking a look at some of these, and right now in the dog days of summer here in June 2024, the volumes right now are much lower than the average volume for the stocks. And some of them are actually trading well below the $100,000 level here in June. But over the longer period, the average volume is actually higher, because that's what we're screening for. So that is also what I want too. I don't want something where the volume is so low, nobody is buying or selling the stock. That's not going to do me any good either. So those 2 little criteria are also in on this screen. So it's pretty intense. We are looking for price to sales ratios under 1, which we always look for. Even when we're doing our own screens. And remember, the price to sales ratio at 1 means you're buying every $1 of sales, you're buying for the $1. But when it goes under 1, that means you're getting the $1 worth of sales at a discount. So if you have a price to sales ratio of 0.7, that means we're only paying 70 cents for every $1 worth of sales for that company. And that's what I want. I love getting sales. Who doesn't? And so, we want to get the sales on sale. And so that's That's already a tough criteria to have. Then the PEG under 1. Now, remember, the PEG ratio is PE divided by growth. So we're hopefully seeing earnings growth with all of these companies that make this screen. And that's not easy to do either, because that's a rare combination, both value plus growth going on. But these companies are going to have that too. And then this screen actually looks for a price to book ratio under 2. And I normally screen for under 3. So this is a little tighter on the price to book end of it. And although on the PE, it does allow a little more wiggle room on the PE ratio. I normally look for 15 and under, or sometimes if we want dirt cheap, I'll look for 10 and under. And this one is looking for under 20. So we have to have some relief somewhere, or maybe we would get 0 stocks every time. So this one is 20 and under, which hopefully will give us a few more names in there. But it's going to have the number 1s and number 2s, which we know just with that criteria is probably whittling it down to just about 800 stocks. And then the value score of A or B is also going to whittle it down even more. So yeah, like this is a tough screen. That's why we love it. That's why we're running it. And so, I put it in, I hit the run key and waited to see. And this time here in June of 2024, the classic value stock screen gave me, drum roll please, 16 matches. Wow. I wasn't expecting 16, to be honest. I was expecting maybe 10 is what I was thinking. But 16, that's a lot. So it gave me a lot to choose from this time to pick 5 out. And the names were mostly what you would assume would be these kind of dirt cheap stocks. Obviously, we don't have any AI plays in here. We don't even have any tech, really, I don't think, was on this list. Not pure play tech, at least. We're not talking any software companies or cloud, anything like that going on. That's all way too expensive now for us. But there was a little bit of more industrial names. There was some retail. There was one home builder. Yeah, one of the home builders is still making this. So the Zacks rank has got a little wonky on us with the home builders a little bit, as some of those analysts are adjusting their estimates. So it's a little harder to get the 1s and 2s on the home builders right now. Many more are 3s, but there was one that made the list, and then it's still cheap across all other metrics and still got that good PEG ratio as well. But yeah, it's some of the favorites are on this list, like the auto manufacturers. They're still making it, so I've included one of those. But let's dive right in and kind of see what are 5 of the names on this. I do have to say there were 2 airlines that made the list, but I decided not to put either one on here. And those airlines are Alaska and United. Those were 2 that made it on there. It's interesting that they got the good Zacks rank plus the style score. And obviously they remain cheap. But I didn't really want to cover the airlines. We all know kind of what some of those issues are with the airlines and why they're so cheap right now. But just for your knowledge, if you are interested in that area, the Alaska and United both made the list. Okay, so let's dive in on 5 other names outside of those 2. Okay, the first one is BASF. No, that's not the railroad that's owned by Berkshire Hathaway. That's BNSF. This is BASF. It's the big chemical conglomerate out of Europe. And their tagline is, "We create chemistry." Ticker is B as in boy, A as in Andrew, S as in Sam, F as in Frank, Y. So it's one of those because it's a foreign company with 5 letters, BASF. Why? And I took a little look at what their first quarter looked like. They saw strong first quarter growth in China, up 9.6%. Global chemical production was up 5.4%. Compared to last year in the first quarter of 2023, it was actually down 0.4%. So we've seen a little bit of improvement there on global chemical production. Their sales in the first quarter were down 12%. However, and they have a $42 billion market cap, so pretty big cap here. So this is kind of disproving maybe we'll find some in the small caps. Not for this one. But chemicals, out of favor. It's on the industrial side of things, but chemicals are the building blocks. So I'm curious to see, BASF getting with that good Zacks rankiness. Something decent must be happening with the earnings estimates to make this screen. And maybe that tells us something that might be going on in the future on the industrial chemical side of things. Let's hope so, right? So, so BASF is cheap, as we know, because it did fit this screen. It does have a PE of 14.2, a PEG ratio of 0.99, and it does pay a dividend. Now, because it's a European company, it may only pay it once or twice a year instead of quarterly. I'm not sure, because Zacks dividend shows it yielding 5.2%. The Yahoo Finance shows it yielding 7.3%. So it's not like a reoccurring, standard dividend. It sounds like it's more variable. But either way, the dividend is pretty good right here. And again, it's cheap as well. So the shares have been falling. Let me just see what has it been doing. That's not in the screen, obviously, but we do kind of want to know, why is it so cheap? And year to date, shares are down 7.3%. The S&P 500 is up 14.6%. They started turning down in April. So it's been a couple month decline here. Let me see in the 3-month chart, down 14.6% on the 3-month chart. So it is falling much more into the value area because the stock is still just getting cheaper. So you might want to keep it on your radar. BASF, BASFY is the ticker. Okay, the next company is one we have talked about in the past. It's Ford, the car manufacturer, ticker just F. It's got the single digit, that's prestige. But these shares also weak over the last 3 months. It's down 6.5. So this one is dirt cheap. The auto manufacturers have been for a while. I've talked about Toyota on the podcast in the past, but this time it's Ford. Toyota did not make this screen. PE of 6, PEG ratio of just 0.7. Does have a market cap of 47 billion. So yet again, another reason why maybe it won't be the small caps. Dividend, it says on Zacks that they're yielding 5%. Let me look at Yahoo. Yeah, Yahoo Finance is saying the same thing. So pretty juicy dividend as well. But we all know what's going on with the auto industry. It has slowed. Prices have come down. And EVs having a bit of a difficulty here as well. So that's Ford, ticker F. Then we'll do the home builder. KB Home is the one that made the list. Ticker K as in Kevin, B as in boy, H, KBH. And it remains dirt cheap as well. The home builders have been. PE of 8.3, PEG of 0.7. It has a market cap of 5.2 billion. It does pay a dividend yielding 1.4%. The home builders were making new all-time highs earlier in the year. They've come off of it a little bit, but not as much as you might think, given that home sales still remain fairly slow and are off about 30% from the pandemic highs. But those gross margins are still holding for the home builders. They still do have pretty good pricing power in many markets because the existing homes that are for sale, that inventory remains pretty low in most markets, but it is now starting to rise in places like Florida and Texas. Will that eventually hit the gross margins for builders like KB Homes? It may. So that's why there's a little bit of a pause in the shares here. So over the last 3 months, the shares are up, but just 0.3%. So really not going much of anywhere over the last 3 months. Over the year to date, they are up, but 9.9%, a little bit under the S&P 500 at 14.6. So that's KB Home, ticker KBH. Then we're going to go to retail and specifically apparel, really. It's mostly apparel, but some accessories. And that's at PVH. Remember them? They own Calvin Klein, Tommy Hilfiger. They are worldwide. So China is in play. What's going on with the Chinese consumer? Ticker is P as in Paul, V as in Victor, H. So same as the name. Year to date, the shares are down 10%. And that's because after the last earnings report, it wasn't good. And so the stock did get slammed and now has kind of remained pretty weak since then. And the 3-month return is down still 18%. So you can see that the street is still a little dubious, still thinking we're going to see some weakness. But that's why the stock is cheap, or partially why. PE of 10, PEG of 0.9. It does pay a dividend, but very small, just 0.1%. Market cap of $6.1 billion. So I like both Tommy Hilfiger and Calvin Klein, those brands. This is a very smart retail operator. They know how to market these brands globally. They do accessories. I think that includes even shoes, things like that. They do sometimes license out that business to others, like G3 Apparel, although they did end some of their marketing agreements. But there's others that, handle watches and various other kind of niche areas that they themselves don't want to manufacture. So they license it out to others that have more experience in doing those areas. But mostly PVH is holding on to these two top brands. And so it'll be interesting to see what they say for this upcoming quarter. We won't hear from them until maybe even end of August. So it's a ways off until we hear from them. So this is going to move with all other news about the consumer and especially on apparel and especially with what's going on in China. If the Chinese consumer starts spending again, this stock will probably likely turn around. But I'm not saying it's trading near its 52-week lows either. It's not. So can it get cheaper? Yes, it always can. Keep that in mind. But right now, it is still a classic value stock. It's got the number 2 rank, and it's got the high style scores. So there's a lot to like. Keep it on your list. That's PVH, ticker PVH. Then we're going to wrap it up with healthcare. But this is on hospitals, outpatient, and behavioral care. And it's universal health services. I'm getting a little tongue-tied there. And the ticker is UHS. U as in uncle, H as in Harry, S as in Sam. UHS. And this stock has been one of the hotter stocks. And so that's surprising. It still remains cheap, even though it is trading near its 52-week highs. So that's always an interesting combination as well, right? So year to date, the stock is up 23% and is trading near, like I just said, its 52-week highs. And so it has been hot. It's taken a little time out in the last couple of weeks here. That's pretty normal. It's up 6.4 though, but that is still beating the S&P 500 actually over the last month. So maybe it's not as cool as I think, but it has been red hot. And, so when it cools even just slightly, it feels maybe worse than what it is. I don't know. But Universal Health, it's got the A of value style score. It's got A for growth too. Momentum is B, even though it's trading near that top highs. And it's got an overall style score of A as well. The VGM is A. So you got to like it. It does pay a dividend yielding 0.4%. So you're not getting that much. PE of just 13.6. PEG ratio of 0.9. So that's all cheap, as we know. That's how it made this screen. Market cap, $12.5 billion. So pretty big, but not a small cap. Did we have any? No. PVH is at 6.1. KB Home is at 5.2. Nothing small. So I'm sorry to disappoint. Even though the small caps are still lagging, they're not making this screen. Perhaps it's harder to get the rank, maybe with the small cap, just fewer analysts covering on them. But then it would only take the one for us to get that high rank. So I'm not sure why we're not getting into small caps. But mids and larges made this list. Again, Universal Health Services is 12.5 billion, so it's right there. That would technically be in the large cap category. Over 10 billion used to be. I wonder if that's been raised at all, because it seems like we have a lot more of these bigger cap companies now, and maybe large cap is really around 20 billion now. But either way, it's not a small cap, so it's pretty good size. They're headquartered in Pennsylvania. So keep that in mind. Keep them on your short list if you're interested in the actual like physical buildings and things. Hospitals, outpatient behavioral care from Universal Health Services. And, that's an interesting area right now too, because there's a lot of baby boomers and they're getting a lot of healthcare out there. So maybe that's why it's trading near those highs. But that ticker, UHS. So as I said, there's some interesting names that are on here this time. And we also have the two airlines, like I mentioned, and they're all on the cheap stock category that we know every time we run this. The auto manufacturers have been on this screen for several years. They remain cheap. Home builders, same for those. But it's been a while since I saw like a chemical company like BASF on here. Or even like the retailers to have the good Zacks rank, because retailers kind of beaten down. And so you got to have some rising earnings estimates to get the number 2 buy rank for PVH. So that's good to see. We're starting to see some recovery in the earnings dynamics on those retailers. But let me recap the stock tickers again. In our classic value stock favorite screen, we had BASF, which is BASFY. We had Ford, which is F. We had KB Home, which is K as in Kathy. B as in boy, H as in Harry, KBH. Then we had PVH, that is the retailer at P as in Paul, V as in Victor, H as in Harry. Then we had Universal Health Services as our final stock, UHS is that ticker, U as in uncle, H as in Harry, S as in Sam. And as always, I keep running these screens and having various other podcasts on items that are worthy of value investors right now, including what's going on with Warren Buffett, what he's buying. He is still buying energy, by the way. And there were no energy stocks on this screen, probably because the rank is just not working out right now in energy. Those earnings estimates have been cut. So they're all over the place, and we're not able right now to get the consistent number 1s and number 2s on energy. But the stocks remain dirt cheap, and Warren Buffett is diving in again. I think he's bought Occidental Petroleum for Berkshire Hathaway like 9 sessions in a row or something recently. This is in this, summer in June here of 2024. So he's putting his money, some of it, to work in the energy side. So you may want to check out some of the energy stocks. We've covered those on the podcast too. I did do a podcast on them recently. So go check out some of our older podcasts on YouTube. Go to Zacks.com and put in Zacks podcast into the search bar, and you will find our separate podcast page where you can find Value Investor plus Nina's Good ETF podcast, and a couple others are also over there. So make sure you check that out and look at those older podcasts on energy to see what's going on with some of those energy stocks. But Buffett is buying, so we do too. And so there's a lot going on with value. Don't miss out. Get us on Apple Podcasts, Spotify, and Amazon Music, and anywhere else you can get podcasts. Basically, we are everywhere. But you can also get us on YouTube on the audio version on Zacks podcast page over there. You can get Zacks Market Edge podcast on our normal video podcast page as a video podcast. That's at Zacks.com/YouTube. I know you know where to get us. Just find us somewhere, Subscribe so you don't miss a single episode, and I'll see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.